Right, question 93. We have some adjustments to play with here and adjust the trial balance with. And the first adjustment here is, it says here that there's an allowance for doubtful debts to be adjusted by 2% of receivables, right? So let's look at the situation. And so what do we have? Let's go and look at the sales ledger control account, because this is the balance in question. So I'll just write, that's 9,500. I'll just do that over here. So our trade receivable figure is 9,500. So we believe that we need to do some further adjustment, and we want the allowance. We believe that we will lose 2% of this figure in the future. We've been adjusting for a while, but we believe this to be the new settled figure, and that's equal to 190. Right, so we want the allowance for doubtful debts to be 190. So we currently have, if you want to think of it this way, 9,500. This is post deleting all the irrecoverables. This is the net figure, and then we have an allowance that we want the brought down figure to be 190. So if you like the carried down figure to be 190 and the brought down figure to be 190. The question here is, what's currently in there? So what is currently in here is where is it? Here we are. We can see an allowance of 400, so and 85. So from the previous year, we had brought down 485. Right, from the previous year, we had brought down 485. This is the balance brought down. So what that means is that if we are going to have this new carry down figure, we need to put through, or we need to release back to the income statement, if you like, the difference. There's just too much in there. So if you find the difference between the two, 485, you have 295. So my journal is debit the allowance, 295, credit the income statement, 290 and 95, right? And that will enable this closing difference to be 190, right? And so this of course will close out 485, but the figure I will have in the income statement is 295. So let's go here and let's look at what's happening here. So that's 295. So what I should have, of course, here would be 295 here, and I should have here 295. And that will lead to a net situation where the new carry, if you go further onwards, you will see that your final figure here in your profit and loss or whatever will be, but your balance carried down on your allowance here, if you carry further on, will be 190 when you finally arrive at that. Okay, so that's the first adjustment. Okay, the next balance to work on is this credit note. So this is a credit note received from a supplier was mislaid. So we're expecting credit note. Now we've found it, and it's a credit note. So, and that's a purchase return, isn't it? And that affects my trade payables and it's VAT. So when I get a return, that is reducing the amount of purchases technically. That's also reducing, the gross amount is reducing what it is I owe. And of course, it means that any VAT I've claimed is kind of, so really my journal is 2,400 and 2,400. So ultimately the return, the credit note ultimately is for 2,400, but I'm going to have to return 400 of that VAT I potentially have claimed on the initial purchase, right? And this will net off or reduce my purchase. So let's do that. What do we have here? We have 2,000 on the credit side of purchases returns, right? So we have 2,000 on the credit side of there, and we have 400 over here, and the purchase ledger control account we will have here 2,400, right? And that manages that, that deals with that, and that's question 2. Let's look at the next one. Okay, and let's see what's happening with rent. It says that rent is payable yearly in advance. So the year end is the 31st of December 2005. So the question says that you have now paid for the 12 months to the 31st of October. So you've gone basically from the 1st of November X5 to the 31st of October X6. So you've paid 10 months too much, right? And because I only need November and December in this year. So therefore, your prepayment is 10 months out of 12 months times the 15,000, which is equal to 12,500, right? 12,500, which means that what we do is that means that you've paid too much. So I credit the rent account 12,500, right? And debit prepayments 12,500. I mean, that's kind of the journal, isn't it? To reduce this rental figure by 12,500. And that's what I do. Right, so I've done that. Now, and let's take that off. Very good. And then let's look at the next question. So it says here the inventory is currently valued at 14,800. It says there was a leak in the cupboard and 3,000 has been damaged and needs to be written off. So I have a loss, if you like, on my closing inventory here. And so what I do is I say, okay, I've got the 14,890 and I take off 3,000, which leaves me with 11,890, right? And that's the value of your inventory. Remember that this closing inventory is very much a case of what I'm really doing here is I'm doing debit closing inventory as the asset, 11,890. And this adjustment here is crediting technically cost of sales when it comes through. So I'm going to see this translate into the asset when I go this way, and I'm going to see this in the income statement on the credit side when I'm adjusting cost of sales, right? And that's kind of what's going on with D. Right, let's look at the final one. It says here, let's give ourselves some space. It says the electricity bill for the 3 months, 450 ended, was received and paid in February 06. Remember, your year end is the 31st of December. So I need two of the 3 months here. I'm interested in 2 of the 3 months, even though to accrue, in effect, right? To accrue. So 2/3 times 450 is 300. So I need to put through an expense of 300 and create an accrual or add that to an existing accrual. So I find electricity. So I top that up by 300. And I need to find the accrual for this. Here we are, 300. Right? And that's kind of how you work that, right? So let's see. And so, yeah, we're done with all of these. You should, I suppose, add all these up. I mean, they should be perfectly equal. Yes, if you add all these up, you should get 27,385, 27,385. Perfect. And that is your first extended trial balance. Question 93.